How many videos you are going to watch before finally getting or understanding support and resistance? I do not know. But one thing I know for sure is that by the end of this video, you're going to get exactly or you're going to briefly understand what support and resistance really is and how you can trade them, how you can get the best possible setups. And when you see them, how do you treat them? So if you're new to my channel, my name is Gislen, and in this video, I'm going to be taking you down the road. That is, I'm just going to summarize this thing as fast as possible. I don't like long videos. They bore the shit out of me. Okay, so I've taken my time and I've watched a couple of these videos. I've watched a handful of these videos, and I see that most of these traders leave out a lot of details. They leave out important details, and they save it for their courses. So you can purchase the course, then you get those details in those courses. So lucky for you, in this video, I'm just going to I'm just getting to the chase. I'm giving you this stuff straight up. No, I'm not giving you any definitions or anything. Okay, we're just getting to it right now, and I'm explaining to you in a layman way that you can quickly understand this ASAP. So if you're a complete beginner, support and resistance. Okay, resistance is a key level in the market that a price is facing strong bearish rejection. Therefore, supply is greater than demand. Therefore, it is a price level in the market where buyers are being overthrown by sellers, meaning people are willing to sell more at that key level than people are willing to buy. So this creates what? A key level in the market where people will be looking to trade from. Not only you, but the rest of the world. The majority of traders use this theories, they use these concepts to trade. So if many people are looking at this particular key level to trade from, the possibility is it is going to hold because there's a lot of volume being traded in one particular direction. So if price has faced strong rejection at this particular key level here, what you want to do is highlight this area and pay close attention to it when next price gets there and you're looking for possible selling opportunities. Then support is the area of is an area of the market where price has faced strong buying momentum, meaning buyers have overthrown sellers. Demand is greater than supply. So people are willing to buy more than people are willing to sell in that market. And when you see the strong push, you should highlight that area and call it support. So that's basically support and resistance, okay? Areas in the market that price has rejected impulsively. That is demand and that is support. The only difference is support is down and resistance is up. So you're looking to sell at resistance and you're looking to buy at support. So how do you confirm? How do you identify valid key levels? So now we're going to cover that. Now, to confirm a valid key level when trading support and resistance, you have to be sure that your key level does not have liquidity above it. 1. 2, your key level should also produce impact, or should I say impulse. Your key level should produce impulse in the market or produce volume that has taken out what? Multiple structures to the downside. Or you can identify it without any stress. You can identify it at ease to see that, okay, this level here, price rejected this area here impulsively to the downside. Okay, so that area, that is your key level, that is your resistance level. Okay, so right there, as a beginner trader, if you are a beginner trader, what I'll advise you is, because the way I trade is slightly different from what I'm going to advise you or how I'm going to advise you to approach the market. I use sell limits and buy limits to trade because I get the best possible entries doing that. But as a beginner trader, what I advise you to do as a beginner trader, you should use confirmations. Okay, wait for candles to engulfing candle or bearish engulfing candles. I'm just going to cover that shortly in this video, so do not worry, we have everything here. Okay, now let's get back to what I was trying to explain. Valid key levels. So what you want to do is you want to look for a price leg like this one. Let's take this one for example. We have an uptrend here. This is an uptrend because the market is forming what? Higher highs and higher lows. Okay, higher high, higher low, higher high, higher low, higher high, higher high, higher low. This market structure is a bullish market structure. So what you want to be doing in a bullish market, you want to be buying in a bullish market. It is bullish because buyers are more willing to buy then sellers are willing to sell. So it is a bullish market. It's a buying market. You should be buying from these key levels. So how do you join the trade? How do you follow the trend or the market? So what you want to do is you look for highs in the market that are formed, broken, then you can look to buy from those levels. The reason is because this level has been formed, but the push was not strong enough to take out this other low. So this is now a key level, but not resistance, because the push delivered from this high was not strong enough to take out the previous low. So this is not resistance. This is just the key level we are looking to trade from if the market breaks it to the upside. So if this key level breaks successfully to the upside, what you want to do now is look for a buy from this level instead, because this is a bullish market. You're looking to buy the market. So if the market breaks up, you look for a rejection inside your key level. You look for an engulfing bullish candle to enter this trade and ride it to the upside. You keep doing that until market changes structure like you did here. So now when you see when the market got to this particular price level, there were a lot of orders here that people had on already. People were like, they're selling this market at this particular price, and the supply overthrown demand. Therefore, supply was way larger than demand was at this particular point in time. So it drove the price drastically to the downside, taking out multiple structure. So this automatically becomes our resistance level. It is valid because the move or the volume produced by this particular price level has broken multiple structures to the downside, shifting the market structure from bullish to bearish. So now we can sell this market. I hope you're understanding what I'm saying. You can replay the video and listen to what I am saying carefully, okay? Resistance is different from all of these levels you see here. These are just key levels, okay? We buy there, we sell there. These are key levels. But this one is resistance because we're looking to sell. We have one objective here. But here we have two objectives, okay? If this thing breaks here, retest, we buy. If it comes all the way, this other trend here, you can see here we are selling it. So it just depends where we are at that point in time, okay? So right now, where is support? Support is the opposite of what I just said. It's the external swing point that has delivered impulse in the market, or a big move that has taken out what? Structures to the upside, okay? You can identify this as support because why? There's no liquidity line below it, one, and two, the move that was generated by this key level took out multiple structures to the upside. So you can call this area support and you're looking to take buys from here. Okay, now let me delete all of this and show you how I take my how I take possible, or how I look for high probability winning trades. This is how I look for high probability setups. Let me delete this. Okay, this is how I look for high probability setups. What I like to see is I like to see the market do this. Okay, do like a double top, something like this, then breaks it to the upside. You feel me? When it breaks it to the upside, what am I looking to do? I'm looking to buy. Oh, I'm sorry. I'm looking to buy from this key level that was formed here. As you can see, price rejected here, not strong enough. That's why we didn't trade here. But when the market retraced back inside its key level, I like to take a buy here. So this is my key level. Okay, this right here is my key level. In an uptrend, that is how I'll follow the trend. The same applies for a downtrend, which I'll cover in a minute. Okay, so if this market bounces here, you look for what? And you look for a confirmation entry. You look for an engulfing candle. Okay, now let's take, for example, this is a bearish candle. Let me just draw something here real quick. Let's just take for example, this right here is a bearish candle. Okay, this is a bearish candle. Oh shit. Let's just take for example, this right here is a bearish candle, right? That is a bearish candle. Then we are inside our key level. This is our key level. This is our key level. All right. I've just zoomed in inside this area here. This is how you're going to enter the trade here to buy this market. Then now this is another candle. Now this candle is the opposite color. This is the bullish candle. It is the buying candle, right? It is a buying candle. It has closed above the previous candle, meaning if this is a red candle closing down here, this bullish candle opened down here and closed up larger than this one, okay? The body of this candle is larger than the previous candle. This is an engulfing candle, and this is where your entry is at. Your entry is here. As soon as this candle closes, you enter the market and your stop loss is below your key level. Your stop loss is below your key level all the way down here. Okay, so now I hope you've understood the entry confirmation. When I say wait for confirmation, this is what I mean. So that's just it. There's nothing too complicated about it. So now if this trend happens to break this area, let's say if this trend happens to break this area, let's say we've bought this market here, right? We've bought a market like that. Then what happens? The market pulls back. It pulls back inside our key level, right? And breaks it all the way down. What are we looking to do next? We're looking to sell because structure has shifted to the downside, right? You follow structure, okay? Follow structure. Structure has shifted to the downside. Let's say this happened. Our key level is still valid. We're looking to grab a sell inside that key level all the way to the downside. When you look at the chart, you're looking for levels that have been tapped multiple times, right? That's what you're looking for. And the best levels are these key levels that have been tapped twice, then broken and rejected. When they break and returns those levels, those are high probability setups. I love those setups. So how do you identify structure shift? What do I mean by structure shifted or structure has shifted? This is what I mean, right? This is an uptrend. This is an uptrend. This is a traditional uptrend, right? Higher highs, higher lows and stuff. Then suddenly we have a move like this. Bam. We have a higher high, but instead of having a higher low, we have a lower low, meaning this low has taken out this low, and now the market is what? Shifting its sentiment to the downside. I hope you're getting this, okay? This is the last key level that we had before the break. That's been tapped here once. It broke, pulled back, we bought it. Then instead of buying here again, it took us out, it broke this level, then pulled back inside. We grab a sell from there. It is just like that. When support breaks, it becomes resistance. Okay? So let's imagine we were buying here. Let's just assume we were buying here. This was support, right? Okay, now when support got broken, it became what? Resistance because we are selling there. So if you are selling from a key level, it is resistance. If you're buying from a key level, it is support. So the same rules apply for a bearish market. I will not go through it. The video is already long enough. I don't want to make this video extremely long. So I just want us to go onto the charts and let me train your eyes how you can spot these levels really, really quickly. So right now you can see that the price got here. You can see this push, right? The price got to this particular key level. Push, pull back in again inside that same key level and pushed, right? Now, when this push occurred, what happened? You can see when this price pushed here, this was not a key level yet. To me, this was not a key level. This became a key level when I saw this move. This is the last high that put this low, right? So I'll put this right here and I'll call it what? I'll call it a change of character. Meaning market has changed character. Market was bearish. If you put a trend line here, you can see market was bearish. All right. But now market is bullish because market has changed character. Market has shifted structure from a bearish market to a bullish market because the last low that put the lowest low, the last high responsible for the lowest point in this market has been swept. So this now is our new low and this is our new high. So we are going back up. So what do you want to be looking for? You want to look for buys. Where's our key level? Of course, it's this area. This right here is our key level. So what you want to do now is when the market gets back there, you wait for what? An engulfing candle, just like I explained. So how do you get an engulfing candle? Oh, step one, all right? You go into the 4-hour chart and you draw your key levels. Or You go on the 1 hour chart, draw your key levels. All these time frames work perfectly fine. It just depends on you. If you're a very busy person, you want to be looking at the larger time frames. If you're free, you have all day, you can look at the lower time frames. So I'm on the 1 hour time frame. I'll go down to the 30 minutes time frame and I'll look for an engulfing candle to enter this market. Go one time frame lower than the time frame you're working on to get your entry signal. You buy the market, and what are you looking for? You're looking for 1:2. That is what I trade, and I feel like it is just the best way to trade this thing. You feel me? Let's just assume an engulfing candle closed here. That's our entry. Stop loss is just below this zone. And we're looking for 1:2 out of the market, meaning you're making 2 times what you're risking. If you risk $100 on this trade, you're getting out with $200. Okay, we're not going to get into risk management in this video, but if you want to see my risk management, you should probably comment down below. Stuff. Okay, let's keep going. All right, there's really, I'll break down this. There's this trade that we took, that we called, my team and I, we took today. So I'll break it down at the end of this video. So you should stick around. All right. So now, when your key level gets broken, like I told you, this was support, right? When it gets broken, your support automatically becomes resistance. Okay, this is it right here. Support has been broken by this price leg, and now it is being retested as resistance. And what do? You go down to the 30 minutes when the price is inside your key level. You step down to one time frame lower than the time frame you're on. It must not necessarily be the 30 minutes, but in my case, it's a 30 minutes. Okay, so you step one time frame down to from the time frame that you're on. You look for an engulfing candle. That will be your entry signal. Then you trade the market down. All right. So these key levels, they keep going. They don't stop. They just don't stop. Okay. Then I'll give you one tip. This is one tip. This is one free tip. This is how I do my stuff. This is how I trade it. All right. When I see my key levels like this, right? If this level is broken, I'm selling here once and that's it. I don't sell here again. I don't sell here again until I see another break. So as this market pulled back here, I grab this buy, I'm done. If it comes back again and rejects, I'm not buying. I'm not buying till it breaks. When it breaks, I sell once, I'm done. I'm not selling again till it breaks again. So I use one key level, one in one direction. When it breaks in the other direction, I use that key level again once. Okay. I don't want to emphasize a lot on that. That's my own personal way of trading, so you should use yours. Okay, guys. I hope you're really getting this video. I hope you're getting everything in this video. You should stop watching a lot of videos, right? If you've watched this one, you should probably watch it again, and stop watching a lot of videos. You know, you're going to develop a skill. If you have knowledge like this, take this knowledge, practicalize it. All right? Like if you go to look for a job, they'll be like, oh, yeah, you have a degree. But what they'll ask you first is experience. Meaning, if you have knowledge like this knowledge alone cannot help you. You have to take this, put it in a real market instead of watching videos up and down. Take that time to practice and gain experience. Experience is the best teacher. That's my advice for you. All right. So you can look at this market differently. The way you look at it, the way I look at it, we have different eyes. All right. So I can see here the market rejected this area, rejected again, rejected again. Then when the market broke this area, automatically all of these rejections here is what? It's a key level. You can see another rejection here. The market rejected, rejected, rejected. When this area breaks, what happens? This area automatically becomes a key level. You feel me? Good. When this area here got rejected, and all of that good stuff, all of it, when it breaks, it becomes a key level. Always does and always will be. That is how we do it. Okay, now let me break down the trades that the trade that we took today. We started the day with a losing trade. Then we took this trade that broke even. What did I see before taking this trade? Let me just explain to you right now. Okay. First of all, you can see that this market structure here is bullish, right? We have higher highs, higher lows, and all of that good stuff. Good. Now, where is our key level? You can look for a level like this that has 1, 2 rejections. Then when the market broke this key level, after all these multiple rejections here, like I told you, The more rejections your key level has, when that level breaks, it is a definite area that you should trade from. Like you should trade from that level. You feel me? So that's exactly what happened. It came right here. You can look at my entry here. It's quite perfect. Like I told you, I use buy limit and sell limits. I don't wait for confirmations, but I recommend you as a complete beginner to use confirmations. When you've built that confidence, then you can go in with stuff like this. Okay. So now when this market pulled in, it almost tapped. It almost completed. It almost hit a TP right up there, like 75%. Then pulled back in and closed this bearish candle. I just signaled the team to close the trade. Then we waited for a bit. The trade moved on like 50%. Then we closed this trade at 50%. So that was it for this trade. And this is exactly what I was looking at. So right now, this is a free tip and a free analysis I've just given you right now. So this trade here might pull up inside the zone, then I'll be grabbing a sell. Or if it breaks the zone, however, I want this trade to break the zone 80%. Like I want it to break it, then pull back to it. Then I'll be grabbing a high probability sell with my team. So if you want to be part of my community, I just started a new Telegram channel. It is free of charge. You can join it down below. But if you want to join my team, my own personal, VIP team, this team, I created this group to share my signals with this set of people. So they come on there and they pay for monthly subscriptions. Then every single trade that I take on a daily basis, I share every signal that I get with them. So they are basically paying for signals. So if you want to be part of the team, you can click on the free link below. You can click on the first link in the description below. It's going to take you directly to a private chat with me. Then you request to join and I'll add you up immediately. So if you've picked up anything here, any valuable content out of this video, please just consider subscribing, like and comment on the video. Tell me what you think. Tell me what you want to see me do next. Then I'll be a guest. All right. Thanks for watching. It's your boy.